listen. Yeah.
Này, can you hear?
Okay.
Can?
Okay. I think. Hi guys. Okay. Sorry, I just get my colleague to help me on mic because I think like you guys cannot hear me. So I believe you guys can hear me so far now. Hi Ajay, how you guys doing? Okay, should we just have for 1 minute? Okay, I will start the session. So basically today we're going to talk about hedging technique in Forex. Yeah. Any one of you guys hedge or never at all? You can let me know as well. Okay. I used to, okay, sometimes but not all the time because I just feel that hedging is quite tiring. Okay, like you need to open buy or sell position either in the same pair or you use correlation. Okay, but maybe I will just share with you guys how I hedge. Okay. Let me see. Alright, I believe I know you guys here. Trading mask, right? You ask for GBP AUD go. What is VIX? Is that we have the chart on VIX there? Let me open the trading view. Just give me a second. Why is loading? Okay, give me a second. Okay, give me okay, you ask for VIX. What is VIX? What is VIX? You're asking about, oh, okay. We have that for IC market or don't have? Just pick one. Okay, I'm looking at that later. Okay. Alright, shall we start again, guys? Good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinar. So today we're going to talk about hedging techniques in Forex. Okay. And before we start the webinar, disclaimer first. Alright, this is marketing communication. You should not construe as investment recommendation. Okay, and risk warning: trading Forex and CFD carry a high level risk to your capital, and you should only trade with money you can afford to lose. Alright. And about myself, my name is Peggy. I'm an investment analyst and a prop trader as well. Okay, so this is the agenda for today. So basically we're going to cover what introduction to Forex hedging, overview of hedging strategy, direct perfect hedging, imperfect hedging with options, correlation, and multiple currency hedging. Okay, so okay, I know that are you drinking a bubble tea now? Okay, so introduction to Forex hedging. So basically Forex hedging, some of you guys may have heard before, is a risk management strategy used by traders and businesses to protect themselves from adverse movements in currency exchange rates. Okay, and the core idea is to open additional position or use financial instruments to offset potential losses from existing exposure, reducing risk of significant financial loss. Okay, hedging is especially useful during periods of high volatility, such as before major economic announcements or geopolitical events. And why we hedge? Okay, of course we want to maximize losses due to currency fluctuation, protect profit margin from international businesses, stabilize cash flow, and financial planning. And who use hedging? It could be one of them is like us, right? Individual individual trader like us is it can be exporter or importer as well, investment fund with foreign assets. Okay, and there will be like 5 or 4 types of forex hedging technique. This is an overview. Okay, first one, we have direct perfect hedging. So basically you offsetting position in the same currency pair. Okay, imperfect hedging, using different instrument or related currencies. Option based hedging, using FX option to protect positions. Or the last one, correlation based hedging, you can hedging via related or correlated currencies pair. And there will be a key factors if you want to do hedging: cost of hedge, complexity, flexibility, and market condition. So let's say if you trade with those like not the major one, okay, and then you want to hedge, you know that the it's really less volume. Okay, so if you want to hedge, you need to pick the currency. I recommend that maybe you trade on those like major pair better. Okay, now this is an example for direct perfect hedging. So the definition: entering and position trade of equal size in the same currency pair. For example, if you go long USD one lot and then you're going to hedge by short USD one lot, of course there will be the advantage and disadvantage. So the advantage one, eliminate all risk on the position, simple to execute. So what about disadvantage? No potential for profit during the favorable moves, not permitted by all broker due to hedging restriction. Okay, some of the broker they allow you to hedge, but some are not. So if you want to like use a hedging technique, you may check with the broker, or you read all those like term and condition first. Okay, now what about imperfect? Okay, let's just go to back to the direct hedging. I used to do that. Okay, for example, if I trade gold, okay, I used to hedge before for gold. Let's say if I were to buy, my hedging gonna be something like that. Let I bring you guys to the charts. Okay, I will do the direct one. Okay, for example, I go back to where are we now? Okay, the indicator, if you want to use it, up to you. Okay, I just stick with EMA 200. Okay, so basically now for example, I used to hedge, which is, let's say it were to put this in my sell entry. Let's say I put my trading sell entry right here. Okay, there will be the zone for me. For example, I'll go down to this at D1. So basically, keep in mind, since we are look at gold right now, so this is gonna be your sell zone for gold, right? This is gonna be your sell zone for gold. So they're gonna be the zone. This is gonna be my zone here. Okay, not recommended you guys to hedge, but if you think, again, hedging required a lot of capital, and you need to know how to manage your lot size as well. Let's say I can't see. Okay, so basically this is gonna be my sell zone based on the zone. It's gonna be the zone quite big, right? This is the D1 candle. So if to sell here, okay, of course hedging, there are no stop loss, guys. There are no stop loss for hedging. If I were to short now, okay, over here it's gonna be my buy stop. Maybe somewhere around here. Okay, I just put the tag tag, I will put on the right and on the, okay, that's it. Just put like buy stop. It's gonna be my stop right here, for example. That's gonna be right. Okay, never mind. Here gonna be by my stop. Basically, so let's say if I were to sell one lot here, my sell into one lot size, one lot. My hedging here for buy stop, I'm gonna put one lot as well. This buy stop, one lot. Okay, right here. I will do that. There's no stop loss. So I'm gonna aim for example, maybe I will aim here for take profit. TP 50 pip. For my sell entry, I will aim for, I will put at the body, for example, at the body here also 50 pip, for example. Okay. Here also another like 50 pip for the sell entry. This is gonna be my buy, right? Buy stop. I'm gonna do like that. There's no stop loss for me. For example, if price falling, I will get maybe one lot will get how many? 50 pip. That will be $500. If price rising, gonna trigger my TP also 500. That is hedge. But if I do that like this, based on the slide that we read just now, you like if you buy one lot, you're gonna sell one lot size, right? No. To me, okay, if let's say if I were to sell here and then price is falling, after it's reverse, it go up, either from here, my buy stop is gonna be now, it's not one lot anymore for myself. So okay, I'll put 1.5 lot. Why? Because now I still have a 14 loss here at one lot. Price rising, if price hit this if price hit my take profit here, how much would have earned, guys? I short here one lot and I buy 1.5 lot. Price hits my take profit, how much I would have earned? Anyone? You guys with me? I can't see your message. Oh, they asked me to re-enter the okay. Ask me to sign into YouTube again. No wonder I cannot see any question at all. Any one of you guys knows? Okay, for example, if I buy here, I sell here at like 2337.5 at one lot, and price falling, but I didn't close, and then price rising, okay, and trigger my buy stop at 1.5 lot and hit my take profit here 50 pip. TP sorry, 50 pip. Maybe I need to TP at, let's just say 50 pip. Hmm. 50 pip. How much I would have earned from this trade with this? Don't talk about the, okay, let just I put that buy right now, for example, make it easy for you guys. Okay, let's say I sell, for example, I sell, don't look at number here, let's say I sell at 3,000, easy. Okay, let's say I sell at 3,000. I sell here at 3,000, price rising to 50 pip. How much I would have earned from this one? So basically you just take 50 pip, 1.5 lot. If hit my take profit, I would have earned 700, right, for my buy entry. But for my sell here, okay, I will lose stop loss also 50 pip. I will lose 500, right? So basically from this trade, I earn or I gain $250. Any one of you guys get confused or okay? I mean, so this is our sell entry today for gold. Okay, I know that our zone is quite big here based on the zone, but this is zone. Okay, the zone, but I'm not sure whether today they are going to, like, you know, close gap like today or not. So like here there's a gap. Okay, so if you want to hedge, this is the idea, okay, that you need to do like that. You get what I mean? Sell here one lot, okay, and then you can put buy stop 1.5 or oh yeah, and let's say another one. If these are gonna get, let's say price, I sell here, okay, price falling, and then trigger my buy stop and rising, and then falling back here again. What you gonna do? You see, able to do like that, you might get confused already. That's why I say that hedging to me is quite like headache. Give me a headache. So basically I just, you know, put either stop loss, that's it. Let's say first we sell here, right? Sell here, price falling a few pip, after it rising, trigger your buy stop, and what you need to do, one lot side here, sell, for one lot. Anyone confused, you can let me know. I will explain one lot here. Okay, and after that you open another buy entry 1.5, price falling here. How much you have, how much over here you're gonna sell to recover your 1.5? You need to open another sell. How many? 2 lot. Another 2 lot here to recover your loss. Okay, it's look like a martingale, but if you understand the concept of martingale, this is a hedge for the same pair, okay, which is called perfect hedging or direct. Okay, basically it's just open buy sell at the same currency. Okay, and now imperfect hedging with option, I don't want to go too much on this because I don't trade option. But what is the option? So basically a financial contract that gives the buyer the right but not the obligation to buy or sell a currency at a set price or on or before a certain date. Okay, if any one of you guys trade option, you should understand, but I basically I don't trade option, okay, because trade so many. Basically I just trade future and forex. That's all. Okay, no option. Okay, hedging example. So a US firm expecting your payment by EUSD, put option to protect against a drop in EUR. Okay, there's a pro and con as well. Definitely protection against downside, allow participation in favor currency movement, and there's a cons as well, require upfront premium payment, more complex than direct hedging. I have a friend who trade options. So basically on Friday night she not going out at all because she said that she need to monitor her trade. She need to, you know, especially if, like, you know, still floating loss, right? She need to monitor, and then she need to close the position before the market close. So to me, I think trade option, yeah, That would be pro and con, but to me I prefer the forex. Okay, or you can hedge with correlation and multiple currency. Okay, so what is correlation? We already know that using a natural relationship between currencies pair to hedge indirectly. So for example, we're gonna go long or buy EURUSD and GBPUSD. We know that they are a positive correlation. Let's say if you buy EURUSD and then you should sell USD CHF because they are move opposite direction, right? So you can use this as well. We know that's right. If you trade anything that pair with USD, USD /XX, whatever pair, right? Let's say you go long or you go buy, and then if you want to hedge, let's say if you buy USD CHF, for example, you buy USD CHF, okay, for example, you buy, and then you have you have the floating loss. So what you need to do, you need to go and you go open EUR USD, right, to sell. Or they move different direction. You can use this technique as well. Okay, that's why if I trade gold, if I buy gold, I will buy EURUSD, I buy GBPUSD as well. And you also sometimes you can look for the key level. For example, if you want to sell gold, okay, sometimes you might go to the EURUSD or GBPUSD to look for the key level. For example, you don't know whether I'm going to sell, for example here. Okay, for example, I'm at H4. Okay, let's say if I were to identify this my key level. Okay, I'm planning to sell gold at the resistance level, and we know that positive correlation with gold, that will be EURUSD and GBPUSD, and now it seems like I think I can sell gold because they also at the resistance level for EURUSD. Sometimes GBPUSD also somehow at the sell zone. Okay, gonna be the sell zone here. We can see the rejection and the wick in the body. This is gonna be my sell zone. Okay, gonna be my sell zone. Okay, so basically sell, right? EUR also reacted off, and gold somehow D1, I will pull from D1, that will be here at the resistance as well, the resistance here for the D1, that will be resistance. But of course I will just highlight this, gonna be my zone, the wick and the body. Let me just highlight again, this is gonna be our sell entry somewhere around here. Okay, so basically now I will look, okay, if I want to sell gold, I will say EURUSD, GBPUSD, that's it. So now let's say if we will short sell gold, okay, and then you say for example, and then you want to hedge, or you want to like hedge, you can go to USDC to buy, right? You can see that because they are negative correlation, we have learned this before. They are at the resistance, positive negative correlation, they will be at the support, so we're gonna buy. Okay, you can hedge like that as well, so you can earn both currency, right? Sometimes if you know how to look, okay, you can get a profit from USD CHF. You also can get a profit from EURUSD, GBPUSD, and gold as well. Okay. I can't see you guys. Yeah. Okay. Okay. Good morning to you and good evening from me. Okay, my time zone is already at like almost 6 o'clock. Okay, any question, guys? Okay, I will have the slide that I just explained which is this one. Okay, so they just finishes advantage useful when direct hedging isn't available, can be cost effective as well. Risk correlation can change due to geopolitical or economic event. Yeah, this is have with gold, especially gold, meaning that remember that gold has negative correlation with dollar. Basically, dollar is falling, gold be rising. But during the wars, right, dollar is rising, gold also rising. So that's why it's about 90 to 95% they are negative correlation, but sometimes they have positive correlation. I think in January or February gold has positive correlation with dollar. Okay, so that's why you need to take note of that as well. Okay, and key takeaway. Okay, so hedging in forex is about managing risk, not eliminating it. The choice of technique depends on your risk tolerance, trading goal, and the specific exposure you face. Combining different hedging strategy can provide more robust protection, especially in volatile or uncertain market. So I used to do hedging, but not anymore, because I personally think that it's require a lot of strength for me, and then I feel like it's pretty stressful as well. So I prefer just put the stop loss. Okay, and last time I used to put the buy stop and sell stop as well, but not anymore. Okay, so basically, because sometimes I put the buy stop, then I get like stop hunting. So basically, like, you know, they clear my stop loss for the sell entry. Okay, and they trigger my buy stop, and after that is reverse and hit my stop loss for my buy stop. Okay, so basically I don't put buy stop and sell stop anymore. Okay, so now we have about 30 minutes, so you can ask me anything, but some of you guys already requested for GBP AUD. And you guys can share with me as well whether you guys hedge or not. Okay, let me go to the higher time frame. Look, price falling, you should look for the buy entry. This is gonna be your pivot point or your buy entry right here. Why is it this color? This is the resistance based on the, let me zoom to see. That's why you can see the rejection in the weekly. Even on the weekly time frame, if you want to draw the trend line, you can just see that on uptrend. Now I go to D1. Okay, D1 I'm gonna look. Okay, basically this is approaching the, you can see they make a higher high, higher low, right? Okay, let me find the key level. This is first support. If you want to pick here, but I look differently, I will pick here. You can use the projection as well. You can see that 161.8 like protection, and you can see the slightly you have the rejection right here, but I saw on my left they're gonna be the other block here. which is aligned with 100% protection, and I think that will be the extension as well. Extension, so you can sell, okay? If this is the zone somewhere around here for you to sell. Okay, now you should wait for the sell entry, because do you see that they are going to make divergence, bearish divergence here. It haven't completed yet, okay? This is forming the divergence, but to complete you need to make a higher high. So either here or price falling right now at the projection. Okay, go to the lower time frame. You look at, okay, if I were to look at H1 for this, there is only the reason that I want to say, because the price ending with value in gap, this is gonna be your value of the block. If I want to trade based on H1 for your bearish OB here, okay, the stop loss you just put above this high. That's why you can see the first time when you pray for the block price rising right to the box, and then you can see the rejection. Now can we go to the lower time frame? M15, what do you see? You see the lovely price action here, right here. Now can we enter sell? This one I will add in, that will be the extension 127. Okay, now I want you to have a tight stop loss. Okay, wait, if you want to sell within this box, okay, you wait for price to go back up here. Wait, let me, and then you will have very tight stop loss just a few pips, or based on Fibonacci. So if price rising to this zone, you sell. Now I'm do M5 trade setup. Your stop loss just above this high. This high. That's it. Okay, meaning you go for long. Oh, sorry. Short, not long, short. At this level, your stop loss, this swing, the previous swing, okay, and you can aim this profit. You have a tight stop loss. Okay, if price hit the stop loss here, the reason we enter, because there is a Fibonacci confluence, right? Projection and extension. There's an order block here. So if you just put very tight stop loss here, so if price hit stop loss, I think you just lose a few dollars, or depend on your lot size. Hit stop loss, you go to this zone and wait for your entry. Okay, but if you are aggressive trader, the blue box is your sell zone. Now I just want to see, like, if the price can, you know, pull slightly higher. But if you want to sell now, it's up to you. Okay, you can sell now because still within this box. Gold. Okay, so done with this. Why I cannot see the, like, the behind one? Okay, can you guys see? Make it a bit. Okay, go. Okay, just now I was drawing the resistance, right? I say that there is a resistance that's for you to sell. So if just now you sell, there is your sell zone. Okay, our sell zone is sell now. Just now I will highlight this, gonna be the zone. for you to sell. Did you sell just now? Did you sell now? Yeah, you sell, right? You can see the rejection. Okay, return a few pip. Okay, lovely. Sell here. Just now, any one of you guys sell, right? The enter, confirm, there's a supply. Here, price rising, you can see that ending with price action. You sell, okay? Where is your take profit? M5 trade setup now for scalping. The take profit is right here. Short. Did you short just now? Let's say we short now. I aim for this take profit. Where is your stop loss? My stop loss just slightly above. Okay, I'll put my stop loss like 3241.57. That's my stop loss. But just now, if you to enter, I ask you to enter now. When I start the webinar, your entry should be here. But you start like just now, that's gonna be your take profit. Almost 100 pip. Okay, these are for your scalping. So you can direct, if you can take risk, you can go. Okay, asking USD CHF. This is my support. Price already bounced off for my support level. Close the gap. This support level, this is the zone. So this is my zone, my buy zone. Price is really rising. Okay, you can see that the zone. I was waiting in this zone for so long, and price closed the gap eventually and then rising. If you go to the lower time frame, what do you see? You see the divergence, which is a confirmation, right? Which is right here. This is your bullish divergence. Price rising already from the support. Okay, price rising from the supports. Where is your take profit? This pair was like, you know, waiting for so long, eventually rising. There's a gap here as well, right? So I will go to H1. So basically I will just aim here first for my take profit at the resistance here. Okay, price rising, it hit take profit about 42 pip, and then another TP gonna be here for TP2 at second resistance. Basically they're gonna close gap right here. Okay, so it is also rising already. Okay, USD JPY. D1 candle. Trend line. Let me do, this is the monthly support, right? This is monthly support right here, the way in the body. Weekly. For weekly, highlight the zone. This is going to be your bearish or the block, which is your sell entry, somewhere around here, right? This zone you can mark out. Whenever it comes, you can sell. It's still fresh zone. Okay, this week doesn't like reach the zone yet. Now I go to the D1 This is my first support. I remove this one, okay? Go to H4. Okay, so basically I'm waiting to buy at this zone. This zone. Okay. Let me see. Okay. I haven't touched. But when we see like that, they're already closing with bullet engulf here, right? First time they came, you can see the rejection at this one. Okay, let me go to M15, have a look. Okay, based on M15, okay, we saw that price already make a market structure chip here. So you don't buy now, okay? You wait for price to pull back. Actually, this already they already make a QM here. In M5, even though like we identified the support below, but sometime, right? And some QM here. So you wait for price to pull back to this level, and then you buy, okay, at this level, at this price. Let's say if you buy here, if price falling below, you can put the stop loss below here, and then if price falling, come here again, you can have another buy here. But if not, from here you just hold, okay? This is M5 entry is right here. Wait for price to pulling down first, which is yeah, 61.8% FIB. Can you guys see the number? Right, you see it's somewhere around there. Stop loss is just put below the extension in M5. Just how many pips? Quite big, 54 pips. No. So if that's too big, stop loss put below this swing low. Hit stop loss, you wait for price to come in the zone here again, and then you buy. This is the price, okay? Here, where to buy here? TP at this level. Let's say where to buy here. TP. Actually 1-to-1 stop loss below this week. But if you can hold, you can put here. It's up to you, okay? I don't have the fixed stop loss, depend on your lot size, depend on your capital, okay? But this is gonna be the entry somewhere around here. I give you the zone for M5, okay? Just a few pips. This is the one. And let's see, say chef, we already say price rising. BTC, price already falling. Okay, BTC, you need to sell based on D1 candle. I already see the divergence here. You need to sell BTC, okay? We're gonna sell BTC, and this is that zone. sell BTC. Okay guys, okay, let's see where to sell. Based on M15 price is mega lower, right? Higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, lower high. So if M15 price is this, gonna your sell entry. You wait for price to pull here and then you sell. I will do M15 trade setup. Okay, this gonna be your take profit. That's gonna be the how many percent? 61.8, slightly below 61.8%. Okay, somewhere around this level. Okay, you have a price to pull here, you sell. It might want to fall now based on like this level. M5. Here I have the AVG, right? But I'm wait here. Okay, it might falling, so you can just decide yourself. But if you can wait, you wait here, safer. Let's just like price pull back a little bit more and then you sell. ETH. Okay, this is the price. Okay, and you take profit here. Where's stop loss? Stop loss you put above this high, this swing high, not this swing high, this swing high. Okay, Ethereum. This is the resistance level, right? Price already make the M pattern, so you need to sell. Price break below, you want to sell somewhere around here. Okay, let's go to the higher time frame first. Based on H4, it's very obvious that price like on a downtrend. Okay, make a lower low, lower high. Let me go to, I don't think they're going, this is a neckline, right? Monthly time frame, price cannot close. I think they come up and get the what? Go up to FVG. Here is FVG, right? Fairly gap. You can see that's why you see the rejection. And now it's maybe close below the neckline for the M pattern. Okay. Within the FVG here, there is also barrier at the block. This one, right? Here. This is the bearish on the block. Now we zoom in to D1. What you're gonna see? Overbought, price falling, and I also saw somewhere is the supply somewhere around here. So you sell, right? This is gonna be your sell zone already. Narrow down. Read your sell zone. Okay, read your sell zone. Okay, I go to H4. Lovely. Use the price action here, right? So you sell. You sell your target here for your take profit. This price. Sell. Target here. TP1. Stop loss above the high, this high. Okay. Any pair, guys? We still have like 5 more minutes before I end the webinars. No, I cover already. Okay, maybe I touch on gold a little bit more. So before I end the webinars, right? So I say we sell, right? We sell now. Price falling already. You see that? So we will target here for your take profit. They just put 30 to 25 easy. Okay, 30 to 25, right? That's your TP1. Okay, last one. I just pick. Okay, before end of webinars. This monthly time frame. Oh, pull back resistance. Wait. That will be the extension rising. D1. That is your first support. It's gonna be your resistance level for D1 candle. H4. First support right here, which is you can buy. This is gonna be my second support. They already closed gap. There will be other block here. You want to trade first time fresh, you can trade. Okay, (61.8%) exact at the first support level. You buy here around this level. I don't have the buy or sell right now, so I suggest you buy somewhere this level. Okay, and the next another sell slightly above, which is this level. You're welcome. Okay, so back to the topic. Like today we just talk about hedging. If you want to practice like hedging strategy, I suggest you practice on your demo account. Okay, and maybe you might need to pick the instrument as well. I used to, but not anymore, because I just feel like it's very tiring for me to hedge. So like I know that some of you guys are, you know, in one graph, right? I mean, in one instrument you got buy sell until you don't know how to, you know, whether you want to close or you want not close. I know that because I have some people in my community, they hedging until it really messy. Okay, what I can tell them, I just say that okay, you need to just either you close our position and start with the fresh entry again. So now I back here, we have the extension, right? You can see the extension with the value of the block slightly above the first resistance. We have another extension, so gonna have a two sales zone. First, we're gonna sell at the base of the block part. We have extension, but if price rising, then the next sales zone gonna be the first resistance with another extension 161.8. Alright guys, that's all for today. Okay, thank you so much for joining, guys. I will see you guys again in the next webinars. Alright, happy trading, take care, bye for now.